Hello traders, Gary Wagner here. It is Friday, approximately 11 a.m. in Honolulu, the 25th day of November, and this is the daily report for gold and silver, our weekend review. It does appear as though this week will end in the same manner that we have seen all week, and that is with the metals lower, stock market lower, and dollar higher. As we go into this Friday, we are currently at 1680, 1681. That's down roughly $14, $15 on the day. And in terms of a percentage loss, we're looking at 0.86, almost 1% lower on the day. We have broken through $31, so to speak. 31.08, as you can see, is the ask. The bid right now, though, is 30.98, and that market is lower also. In terms of where it's trading, it is trading off roughly 2.79%, down about a percentage point, 0.89%. Very interesting week in the market. Interesting for a couple of reasons. First of all, the continuing concerns and continuing problems that we are witnessing in the European Union has basically gone from a flight to quality safe haven investing, meaning into the precious metals, into gold, and it has gone into the dollar and actually put pressure on the precious metals. I find that incredibly interesting, but it is what it is. Let's take a look at this dollar index and you can see what I'm talking about. When we look at the actual move within the dollar index, you can see that it opened on Monday 78.22, closing quite considerably higher, 79.83. That's a tremendous move in the market. You can see that it opened on the close of last week's trading activity and really, in essence, never looked back. When we look at the stock market, you can see that on a daily chart, we have had 1, 2, 3, 4, 5, 6, 7 days in which we have seen lower prices. When we convert this into a weekly to kind of smooth it out, you can really see the kind of move that we saw in the marketplace this week, a tremendous move. And what I find so disconcerting, so to speak, is the type of candle that we are looking at. Because this type of candle is called a Marubozu. A Marubozu is also called a shaven head. And a Marubozu is significant in that it's a long candle. It opens exactly on the high of the week, and it closes on the low of the week. You notice Marubozu meaning an absence of tails, and you have no wicks above it and no wicks below it. And what that tells you is that the dynamic force trading this market lower has been able to not only push the market lower, but the bulls were never able to even gain control for a short while. That would give you a higher high and then it would come back down. And to me, it's significant in that we have this Marubozu candle. So with that in mind, meaning dollar higher, stock market lower, what are we looking at in the precious metals? Well, interestingly enough, my daily viewers, we have been talking about this all week, and that is the fact that we were looking at two possible counts within the marketplace. One in which we believed that the possibility was we had entered a impulse phase, and to do that, the count we were looking at was basically a major A, B, and C. We would start our impulse phase, 1, 2, 3. However, what we realized is that the indicators that we needed to see to confirm or to give us underlying evidence to that assumption was as follows. If, in fact, this is going to be a major ABC correction, this particular wave up right in here should have breached 1830, which is the 76%. It, in fact, did not. That indicated to us that this particular rally, and when I say this rally, I'm looking at the rally from really the end of September, in which the market hit that low of 1534 up until call it first part of November, in which we hit a 1802 high. That now falls absolutely in line with basic Elliott wave theory. And basic Elliott wave theory is going to look for a move in the marketplace anywhere between 50% and 75% that of the move that we saw in a major A. So as the market comes down, my belief is this is our major A right in here. A typical B wave is going to take you anywhere between 50 and 75% that of A. And as you can see, this 1802 falls right within those particular benchmarks. And so it is my current belief, because of the evidence, that we are now in a major C wave, or a protracted correction, which really began, looking back at it, beginning of September. These highs right here and here. And so now the question is, where will this correction end? How will it unfold? And at what price will it terminate? And we have been talking about this all week, but once again, it still is clear that we have to get more evidence. In other words, a major C can unfold in one of three ways. The first way is simply called a truncated C. Now, a truncated C is a market in which, as this C wave corrects, this being the bottom of our A wave, or the low 1534, any move that does not make it to this low and then terminates that wave is considered a truncated C. The second type of C wave that is basically illustrated within Elliott wave doctrine is simply called a flat. And on a flat, what you get is you get an A, takes you to a new low, a B, 50 to 75% that of the prior A, and then your C wave is about equal to the A wave. So on a basic flat, you would have a C that would terminate at 1534. Now, the third type of basic C wave that has been documented in terms of the main types is simply called a standard zigzag. On a standard zigzag, you get your A, you then get your B, and your C would fall below that of A, and that's why it's called a standard zigzag. Now, what will we see and where will that terminate? Well, we really need to see evidence, and the evidence that I'm going to be looking for is going to be dual-fold. There's two things I'm going to want to see. The first thing is how it reacts at certain Fibonacci retracement levels. And the second thing will be an indication by means of candlestick patterns that tells us we're at a bottom. Do we see an indication of one or both of those now? Well, the answer has to be no. We really don't. We don't have any kind of strong confirmation as of yet. And what I mean is this. We do have the market finding some tentative support right around 1680. And if you can see, 1680 is a 61% retracement when we take a look at this last rally, which was from roughly 1600 to about 1800, and you can see the market coming down roughly 61%. However, when we look at any kind of a candlestick pattern, quite honestly, there is no reversal indicators that we're seeing and nothing indicating a bullish move as of yet. In fact, if anything, it's still showing us a bearish slant. So where would we look for this market to go to? It is much too early to tell. 1607, that would be a equal low to this little dip that we saw in the market here. A flat would take us well below 1600. I don't anticipate that yet, but as I say, that's something that we will have to wait and see. But right now, if it cannot hold this area, and the area that I'm looking at, roughly 1680, market trading right in that area, really our next spot is going to be 1653. That would be the next spot we would look at for the market to find support. Which takes us to our silver chart and current prognosis for silver. Traders with silver, I have to acknowledge I have been more bearish on silver than I have been on gold, both on the upswings as well as these recent corrections. Why? We've talked about this again all week. It's that double-edged sword. You've got silver being accumulated as the rich or poor man's gold and as a hedge against inflation and a safe haven investment. At the second part of the sword, you have silver as a highly used industrial metal. And in fact, demand for silver was down about 23% over this last year, which shows you that when you have these two factors combining together and a negative slant in the market, this market will continue to go lower. Where are we expecting the market to go? Well, the first thing I have to say in terms of silver right now is the point to watch is going to be 30.23 because it has broken significantly through 31.90 and 31.51. This to me is a harmonics area. Harmonics area is when you take two different retracement sequences, meaning time cycles. So you've got this time cycle here from the beginning or end of January, let's call it, to the second record top right around $50. And then you have this move here, $44 down to an equal low of around 25 and change, call it $26, just below $26. When you look at it, you have two areas which form harmonics. Harmonics meaning you get these two bands coming in at the same point. Right in here, there's harmonics. You see those two lines. The second point of harmonics is right in here. And if you notice at the activity when we saw these harmonics, realize this, look at this, you get this top. We talked about the fact, traders who've been with me for a while, you know that it was my contention if we couldn't make it over this critical area because of the harmonics, 35.01, we would in fact see lower prices. In fact, when I was asked, where do I think it's going on the upside, my answer was it first has to go above $35 before I can look at any potential upside. As you can see, it was never able to. This is your second harmonics right in this area, and therefore this is that band it's been trading in. And lo and behold, you got a break below, well below this band today. So where do I think the market's headed? My personal feeling is that we'll need to look at the low $30 mark. So I think that right now this market has another dollar before we can even look to find potential support. If in fact it breaks through this though, we're really in no man's land in terms of straight Fibonacci numbers in between these 2 points, meaning $26 and $30. There's really nothing there for me to plot in terms of strategic Fibonacci retracement. So we look at other things. We'll look at the fact that when this market came up, we had this little dip here, so we'll look at this as an area, but when you follow it through, you'll see that that matches here. You'll notice we have almost a straight rise up till here. It's going to be very difficult to peg where the market will go on the downside because there is really no strong level of support anywhere within this market in between this 30.23 and 25.87. This has been Gary Wagner wishing you as always good trading. Have a great weekend. Have a great Thanksgiving weekend for those on the mainland. We'll talk to you on Monday for another daily update and review. Bye-bye.